Welcome back. Let's welcome back to Let's Talk
You
Marriage.
forgot where you were. Where were you?
I don't know. My mind was going for a second.
I don't think you're on Let's Talk Marriage. What
Well,
show are you on?
we're gonna try this again. Welcome back to Let's Talk Marriage through transparency.
Oh my goodness. Well, we are back, guys, and we are so happy to be back today. We have a special guest today. Let me tell you, this guest that is coming on, she has been uh, doing what she does, and she loves what she does. She's been doing it for some time now. Of course, I'm going to let her come on and explain those things to you, but she is absolutely an amazing person, and I am honored. We are honored to actually have her on today. She's a person that I've watched in the background do so many different things to perfect her craft. And it is such an amazing thing, like when you have your own business, that you perfect your craft and that you go and you do the things necessary to make sure that you build upon those things and not giving people just anything. So I am so happy and so honored today to introduce to you guys and present to others Marie Porter.
Thank you for that introduction, Taisha. Hello, everyone.
I'm
Happy
so happy
Sunday.
you're here.
Thank you. I'm happy to be on.
Thank you for accepting the invite. I really appreciate you coming on here and sharing your expertise with our Facebook and YouTube family on today. And I'm sure the people will appreciate the things that you have to offer as well. So, without further delay, I guess let's get into it.
But
Y'all ready?
before we get into that, most
Okay.
important people have to understand when it comes to our finances, very important inside a marriage. It help build a foundation on a lot of different things that you're able to do, vacations, going out to eat, buying groceries, paying your rent, even down to paying your taxes. So this portion is very important to help your marriage to build because sometimes majority of our arguments is about finance.
Right. And so I hope that you're able to help clarify and open up some different things as it pertains to saving, how to save, maybe also how to prepare your taxes, how it can help you in the long run with your business, with people that are wanting to open business and things like that. So I know that you're not shy to accepting phone calls either, right?
I am not shy at all. Call me whenever.
Okay. So you guys can call in. We have 754-303-9976 to ask your questions, but you can also ask your questions on in the comments and we'll post them for her and she'll answer them the best of her ability. So are you ready to jump on in?
Let's go.
All right. So she has something here for you guys, and I'm going to go ahead and just put it up. But before we do that, I want you to just share with the people exactly who you are.
Okay, my name is Marie Porter. I am the proud owner and founder of Lioness Accounting and Tax Services, Inc. We do bookkeeping, taxes, payroll, general accounting, amongst other things. I've been in business for virtually about 2 years, but I've been an accountant for 14 years. And a little bit about me is that I'm a proud graduate of the University of Miami for undergrad.
Ooh, okay.
For my upper degree, my master's degree, I went to Florida International University.
That's right, girl. That's right. Put that stuff up there. All right, HBCU. All right. Okay, so what else would you like the people to know about you?
I am diligent. I work hard. I'm the type of person that likes to educate my taxpayer, educate my clients instead of just taking their money. So you will learn with me. And
Absolutely.
I keep, like you said, I go to conferences, I keep myself abreast of all new information so that I can guide my clients correctly.
Absolutely. And we appreciate that too. All right. So let's go ahead and add your slides on. Are you ready?
Ready?
She has some things here. Let me tell you guys. This is amazing how she has all these slides prepared and ready for you guys. Babe, get your questions ready as well
Oh,
because
I am.
I know you have some because you're always asking me stuff. I'm like, I don't know. We have to ask Marie.
You got it right.
All right.
Uh,
So go ahead. What's this? The first one, and you have to tell me when to change the slide now.
no problem. Okay, so today we're going to be discussing how to avoid big tax mistakes that most people make. Don't be shy. Ask questions as we're going along. You don't have to wait to the end of the presentation in order to ask your question. I will be answering. If anything seems unclear or you need further clarification, feel free to ask. Okay,
All
so
right. Next slide.
mhm. This is my introduction. I just mentioned who I am. So I have a bachelor's of business administration, major in accounting, and I have a master's of accounting. And here is my business information. This is
So
my
for those of you who are looking for an accountant or just wanting to file your taxes for your businesses and things like that as well, you do all of that, don't you?
I do.
All right. All right. Let's go
I
on to the
register
next.
businesses. I do the taxes. I do the bookkeeping. So one-stop shop over here.
Now for bookkeeping,
Hmm.
tell the people what is bookkeeping exactly because I know what it is.
Okay.
But sometimes we have people that don't understand what bookkeeping is, and it's a service that I don't want to do myself.
Mhm.
It's too tedious. But to have somebody like you tell us exactly what bookkeeping is.
Bookkeeping is basically keeping track of all of the transactions that happen in your business from beginning to end. So it's keeping track and categorizing. So you would actually, there are some tools that I use. There's a free website called www.waveapps.com that is good for accounting, and there's also QuickBooks. Those are the two that I use heavily. So what you do is you're basically taking stock of what has happened financially in your business from the beginning of the month to the end of the month. We pretty much do bookkeeping monthly, but you need the yearly numbers in order to complete your taxes. So, and in order to actually get grants, loans, there are reasons why you need to keep track of your finances, right?
Right.
So that's basically the gist of it. Bookkeeping is keeping a record of everything that happens financially in your business, keeping track of your revenues and expenses, keeping track of your profits, your assets, everything that goes on.
How is this good for in a marriage? Can we use bookkeeping like in a marriage on the things that we're doing and spending the monies that we're spending and things like that?
Yes, you should actually. So bookkeeping in a marriage, you should be keeping track of all of the income that's coming in, know where your money goes, because a lot of times people we just get our paycheck and we're like, okay, let's spend this, spend that. People don't budget. You need to be able to budget. Tell your money where to go instead of just sending your money somewhere. So you need to plan where your money is going every month because at the end of the day you need to know what your cost drivers are. There's a very good app called the Mint app, so I would suggest that people download the Mint app so they can see where all their expenses are flowing to.
Say what you spell what you're saying. MINT app.
Mint.
Yeah.
Okay.
It's also a part of one of the QuickBooks enterprise products. So Mint is free.
Hmm.
So it will tell you, okay, you spend this amount on groceries, you spend that amount on utilities based on the vendors that you're spending on. It knows what to categorize it as.
Good. All right. Thank you for that.
You're
We
welcome.
use the Mint app. I just use the husband app, and he's like, "This is where your money is going, and this is
That's
what we're
good
not.
too.
This is what we're not gonna do. And here's your allowance for the day." I'm like, "Dude, are you kidding me right now?" He's like, "No, you're spending too much." So,
Food
Mint
is
app,
the biggest expense. You'll be surprised how much meals add up when you're in the street. So just be careful with that $5 Starbucks coffee, that McDonald's meal that you just thought, oh, I just quickly ran into McDonald's. It adds up.
It
all right.
does. Yes, it does.
For
And your
those, why are
Netflix,
you looking at me?
the
I don't just
subscription.
buy food out all the time. What you talking about? For those of you who are just joining in, we are with Marie Porter. You guys, she is a tax accountant, and she's been doing this for many years. And you guys can ask her some questions, and you can call in at 754-303-9976. Please make sure that you like, comment, and share. We're on Facebook, and we're also right here. We're right here on Facebook, and we're also on YouTube. So, for those of you who are just coming in, don't be shy. Ask your questions. This may be the only time that you get to ask certain questions that you have, burning on the inside of you that you want to ask, and you can ask her right here. She's here live and in effect. So, let me go to your next slide.
Okay. So, tax return basics. Everybody wants a refund, but they don't know how taxes actually work. Okay.
Hmm.
So, we start off at gross income. All income is reportable. It may not be taxable, but all income is reportable, even illegal income. So, we know that marijuana is not federally legal, but IRS, they still want their cut of
I
that
saw
money,
that on their page. They were like, "We still want."
and they're serious about it.
Mhm.
So, there are many people that have been caught up with IRS, mobsters, etc. They know that you're doing something illegal. Just get them their cut. So you have to
But
be
now, how
careful.
do they risk, or how do they not risk the chances of going to jail?
Oh, that's another story. They're you still
Because
going
I
to
mean, if
jail
they're paying
regardless, but you just
taxes,
won't
I,
get
I
the
mean, you
extra
don't want them
charge
to know
for
everything.
evading. Right. You just won't get the extra charge for evading the IRS, but you're still going to jail for whatever
Oh,
illegal
Jesus!
activity that
I
you're
hope
doing.
that y'all don't listen to that.
You just won't have the extra sentence when they
Oh
catch
my
you.
goodness.
Okay. So all income is reportable. Just know that. There are adjustments to your income, which means if you ha- have teacher expenses, if you're a teacher and you spent to like decorate your classroom, etc., supplies, or if you contributed to retirement, those are things that actually are adjustments to income.
Okay, I see you got your papers rolling there.
Yeah, because the slides came down. By the way, you have to put
I
it back up.
know, I know. I took it
All
down
right,
so we could see your face.
awesome.
So, so
Perfection.
what's the next thing you have? And you want me to stay on this one or go to the
Stay
next
on
one?
this one because I'm just gonna go through. It's a formula, so we're at the top of the formula where we have income, then we have adjustments subtracted, then that comes to your adjusted gross income.
Mm-hmm.
You guys hear about AGI? That's what that is. Your gross income minus the adjustments. Then you have the standard deduction or the itemized deduction. So IRS always gives you a freebie every year, right? So they say that, okay, for individuals, 12,550 of your income this year, we're not even going to tax that. We're just giving you a freebie deduction, right? If you have expenditures more than that freebie deduction, then you can itemize. So if you have deductions that are, say, $13,000 versus the 12,550, then you can itemize $13,000, which that subtracts from your income. Okay. So this comes to, then you have exemptions, whether you have kids, your dependents basically are your exemptions. And then that comes to your taxable income, right? From your taxable income, we calculate the federal income tax. We are on a progressive tax system. For people that does not know, your income tax is not taxed at a flat rate. It's in tiers. So you will have this is just an arbitrary number. So like the first bracket, like if you made, this is an example, this is not exact. Like the first $10,000 is taxed probably at 10%. Then the next $5,000 is taxed at 12. That's how our tax system works. Okay. It is not a flat rate. So when you hear people saying that they're moving up in tax brackets, that's what they're talking about. Okay.
Oh, wow. Okay, I didn't know this.
Mhm. Then you have
So,
tax credits. Go ahead, Taisha.
no, no, no. Go ahead. Go ahead. Keep going. I'll hold my question to the end.
Okay, no problem. Then we have tax credits subtracted from the actual income tax. So the adjustments above, they reduce the taxable income. Tax credits reduce the actual tax you owe line by line. So this would be dependent gear credit. If you have like fuel tax credit, anything named credit, the does your taxes, reduces it line by line. Then we have other taxes, which would be like self-employment, etc. Then you have payments, which is what was withheld from your W-2, or if you did estimated payments throughout the year, that is also subtracted, and then we come up with your tax due or refund.
Now, all of this, this is a lot of information, and
Hmm.
some people don't care about that. They just want to know how much money are they going to get back.
Right.
How do we increase? I think you are already there. What were you going to say?
So here's the problem. Everybody wants a refund, but sometimes people will not be entitled to a refund, and they have to be okay with that. Because if you make tons of money, right? If you're not paying estimated taxes, you wouldn't be making getting your money back. The refund means a refund only means you overpaid the IRS all year, right? There are some credits that are refundable credits that whether you pay the IRS all year or not, you're going to get that. Like child tax credit, it's refundable, right? Dependent care credit, it's refundable. Whether you paid it, paid into the system or not, you're going to get it, right? Or a certain percentage. Some have a percentage that you're going to get back.
Now,
But
what if I don't want to pay the IRS? What if I just want my money now?
if you want your money
Yeah.
early,
What if I don't want to pay the IRS any taxes and I just want to file tax exempt all year round? Is that something that we could do? Because you just said if we give the reason we get a tax or
refund.
we get a refund back is because we have overpaid the government for all those years or
Mhm.
for that year, right?
Right.
What if I don't want them to have my money? What if I want to keep it? Are we allowed to do that?
You can keep it, but you're going to owe it at the end of the year because you're not
All of it or some of it?
you're going to owe some of it. But here's the thing. Remember, I was telling you that when you file your taxes, the IRS gives you a freebie. They give you that standard deduction or they give you the itemized, and then the rest you pay tax of
Mhm.
on, right? So you need to know that, okay, if I'm filing zero, right? Well, if you're filing, it's the opposite. Or if you file zero, that
Mhm.
means that they're taking less taxes. If you file zero, they're taking less taxes because you're saying that you don't have any exemptions, you don't have any dependents. Like that's why most people file like single zero, so that they take the most taxes out so they don't have to owe at the end of the year, right?
Right, right.
So that's the purpose of that. But if you're filing, I know people that have filed, they have, say you have two kids, but yet you're filing five exemptions on your W 4. So now you've overpaid. I've seen, well, you've had the IRS give you too much during the year, right? So the IRS has sent letters to your employer and tell your employer you can no longer allow this person to withdraw this amount. This person has to say they only have this amount of dependents for this amount of time. So
Right.
the IRS knows what you're doing. So don't play with the IRS. Okay. So you need to, if you have two dependents, then on your W
You gotta
4,
stop playing with the
Oh,
IRS.
well, I've seen it happen several times. It is hilarious. No, he
yeah,
can file tax exemption no more.
right. So they do that. So you have to just make sure that you're claiming your own kids, you're claiming the right amount of
Oh,
kids.
okay. Good.
Like that's what you need to be doing.
Okay.
Okay.
All right, let's go to your next slide because this one getting us in trouble.
No problem. Okay, itemized deductions. These are just a few things that you can itemize on your Schedule A. Now, remember, these are things that if the standard deduction is not in, well, if the standard deduction is 12,550, right? If you have more of these type of deductions on the itemized deductions, which is your Schedule A, you can take this instead of the standard deduction, okay? If
Mm-hmm.
not, you can take both. So sometimes people are like, I put my medical and dental expenses on my tax return and it didn't give me any extra money. It's because
Right.
it's either or. Okay. If all of these expenses added up does not come up to what your standard deduction is supposed to be, then you are not getting more than your standard deduction. Okay.
Okay.
Now the question that's coming up is, what is Schedule C?
It's coming.
Uh-oh.
It's in a
Let,
future.
Wait a minute.
let
Hold your
me be
horses.
quiet.
Because we are on just Schedule A.
We are in Schedule A. Schedule C is
Okay.
coming in 1 minute.
We
So
go.
medical. So here is a see. Here we go. Schedule
There
C.
it is. I see it. It's coming.
Entities and tax treatments. Okay. So there are basically four different type of entities that your business can be. You can be a sole proprietorship, which a Schedule C is necessary. A Schedule C is basically an attachment to your 1040 that tells you what the income and expenses of that business is. Okay. So an LLC, sole proprietorship is one. An LLC is another type of business. It can be a sole proprietorship or a partnership and requires a Schedule C or a 1065 with what we call K1s. So a Schedule C is for if you have one owner. A 1065 is a partnership return, which is separate from the 1040, and you would have K1. So the K1s would say how much each partner made. So the K1s is what each individual owner of that partnership will put with their 1040. So it's like if you're a sole proprietorship, you would put your Schedule C with your 1040, right? If you're a partnership, each individual owner would put their K1 with their 1040. So that's how that works.
So we recently we just had to do a Schedule C for our business.
Right.
And I never understood why we had to file those taxes with our regular taxes. Can you kind of help us out with that a little bit?
Okay, why would you file the business taxes with your regular?
Right.
Because as far as if you don't have a S corp, or if you didn't incorporate it as an S corp or a corporation, it doesn't warrant a separate return. So in order to keep your business, well, your business is separate, legally protected with the LLC, right? It's legally protected with the LLC, the S corp, corporation. It's still treated as a separate entity as long as you have an EIN number, right? And you incorporated what you have to incorporate. But if it's like a sole proprietorship and you did not elect any of the other, you can be an LLC and you can have as be treated as an S corp, and that warrants a separate return. But with the Schedule C, if you did not get it treated as an S corp or a corp, you're still going to have that schedule. I can't really answer why. It's just that it just is. A Schedule C is
Oh,
what, that's just how it is.
okay. Well, thanks
If
for
it's
answering
not,
it the best of your ability. I never understood why
yeah,
we had to do both.
because it's basically it goes with your social security number. It's just a profit and loss schedule. Just about that.
Yeah. Somebody said thanks.
Yeah. So
Oh,
if you can, but see, I don't like the Schedule C portion because I don't like if I'm presenting. I'm an S corp, right? So if
mhm.
I'm presenting my financial information, I don't want everybody to go into my other, because when you're applying for like loans or just grants, you have to present all your business. If you and your husband are on the same return, you have to present your 1040,
Right.
the schedule. They don't need to know all of that. That's none of their business to be,
So
right?
how would we be able to go around that? That's what I'm seeing as well. Why would we do that? How can we go around all of that and not have to, or do we need to turn it into your company into an S corp?
You, in order to file a separate return, you will, but there are different rules for an S corp. When you turn your company into an S corp, you would have to pay yourself a salary, and that's what a lot of people don't know, because an S corp is a flow through entity. How do you change it? With
Look,
a
he's
20,
asking the same question I'm asking. You're answering it now.
right, the 2553. So there's a 2553 that is change of entity. So you fill that out and you're able to change your LLC into an S corp.
Sounds good. It sounds like that's something that we should do anyway, because I don't want the IRS and all those people in our, well, they're already in our regular business anyway. It doesn't even matter. It doesn't even matter, does it? Because they're in everything anyway. They know I'm married.
They
They
are in
know.
everything, but I just so you don't have to relinquish that certain the IRS will know, but every other entity don't have to know.
Oh, so
Ah,
basically, if
Right.
you're
It depends
with
on who you're
bank hand, you would
right.
it's better to do it that way.
so it looks like I'll be changing some things around.
Yeah, but you have to be careful to know that with the escort, you have to pay yourself a salary. They want you to pay yourself a reasonable compensation if you are the owner. Because a lot of people file escort to get around paying self-employment taxes. And you need to pay yourself a salary because you are an employee of the escort when you are escort. When you're the owner, you're an employee of the escort.
So, but when you're an LLC just starting out, it doesn't make any sense to do that because, you're just going to pay your taxes and the money. I mean, the
You're
money.
going to pay self-employment taxes instead of
Oh, I don't want to do. See, it's something. It's always something, Marie. It's always something.
it's always
So
something.
we'll
But
just stick with what we're doing. Don't make me change nothing. You already got us getting ready to tell the IRS that that people selling drugs. Like
I know, right?
you guys who are just coming in, who are just tuning in, you got to go back to the first beginning of what we were talking about. The IRS wants everything. You're still going to jail. Do not sell drugs. You're still going to jail, but they before you go, you just won't have that evasion of taxes
You
uh,
don't have that charge.
Charge to you.
attached to you. So pay your taxes on your drugs out there, people. All right, let's go to your next slide here.
Okay, no, go
Yeah,
back.
thank
There's
you,
one more
Marie.
thing. There was one more thing on the other
Oh,
side, the C corp.
sorry.
So no, that's no problem. Just the regular corporation that files a 1120. So this is not a flow through. Well, it files an 1120, not an 1120s. So that's the last entity, and that is a separate return also. Okay.
All right.
So all righty. So biggest tax mistakes. Let's take our time with this because I want to make sure all of you are right. Okay. So not filing on time. Your business taxes are due March 15th. If it's not a Schedule C, if it's a partnership 1120s, it needs to be in on March 15th. Everything else, April 18th, right? You can file an extension. It gives you 6 months. Don't be lazy. If you know you're going to be late with your taxes, you need to file an extension. And the extension does not cover the payment. So if you know that you owe approximately, I want to say 20,000, right? And you don't pay that 20,000 on time, you can pay in installments. You still are going to have the interest due, but you're not going to have the penalty because you actually are putting it on installment, right? You can
Mm-hmm.
put on installments, or you can pay if you don't know what to pay with your filing when you're filing an extension. Here's the rule of thumb: you have to pay at least 90% of the current tax due, or 100% of the tax that was due last year. Okay,
So wait
that's
a
a
minute.
safe harbor.
Wait.
Hmm.
So you're telling me if we don't file taxes before now, I always thought that you didn't have to file it until April. So there is a deadline of March, and you should file an extension if you
It
don't pay it
depends
by
on
March.
what entity you are. If you are an S corp,
Oh,
March
Oh,
15th.
this is for
businesses.
businesses. Oh yeah,
Mhm.
we know that part. Okay, but
Yeah,
still, for the people who don't know, y'all need to get
individuals,
this.
April 18th, right?
Uh huh.
But you still, whether you're a business or you're an individual, you can have an extension to file your taxes, right? But you have to file the extension before, of course, the due date, right? So if your return is due March 15th, you file an extension, it'll be due September 15th.
Hmm.
Yours is due in April, file an extension is due October 15th. Okay. But
I hope y'all writing this
you
down because I'm not going to remember this for you. Y'all got to come back to the video,
but
and
you still got to pay it. Yeah, you still got to pay your money. Don't think that I filed an extension, I'm good. I don't have to pay this money until October. That is not a fact.
mm,
Okay, you
That's good
still have to pay the
information.
money on time, or at least get installments for the money that you owe.
Oh, wow.
Okay.
All right. Again, for those of you who are just coming in, you can continue to ask your questions on the sideline here. I think I have a lot of questions for myself. And then you guys are like right behind me asking the same exact questions. But your slides are very informative and they're giving a lot of information before we can even, I think to ask the question. So uh, this is really, really good. So remember to like, comment, and share. And you guys can also call in if you need to at 754-303-9976. And thank you guys everybody who's tuning in. We really appreciate you guys tuning in today. So go ahead, Marie. We're ready.
No problem. So, mistake number two is not reporting all of your income. So, you have 1099s, lottery. Everybody just remembers the W-2, but there are other things that are going on that you need to report on your taxes, okay? 1099, lottery, dividends, alimony. If you got divorced before 2019, your alimony is taxable. Okay, a lot of people don't know that.
Mm.
So the person that's paying the alimony can still deduct their alimony. The person that's getting the alimony is taxable. Okay, so if you got divorced before 2019, you should have held on to that person a little longer because now you don't have to pay taxes on it. But if your divorce was before 2019, you are paying taxes on that. Okay.
Gee whiz. I have a question on the side here. Someone has a question.
No problem.
How much can we use for travel expenses when you have an LLC sole partnership?
Proprietorship.
Mm-hmm.
There's not really a travel expenses. You just have to make sure that it's legit. Let's put it like that. Make sure it's legit. Don't say that I went to go visit my friend, my cousin up the street, and it's not a business trip. You need to, if you're going to like a conference, if you're going to do business, if you're going, even if you went to like a football game to entertain people, like to entertain your client, or you went to as a networking event, you can actually claim those. So I wouldn't say that think of it in terms of a threshold, think of it in terms of it being legitimate.
Mm.
More than likely, everything has a threshold, but you won't, everyday people, we're not going to meet that threshold if you're doing it the right way. Like, so don't be very careful because they do audit that. So a lot of people try to get away with mileage and travel expenses. Don't be flagrant with it. Don't be putting like $1 million. Every trip has to be a business trip. Unless your business calls for business needs for you traveling all of the time, don't do it. Because the IRS, that's one of the first things that they're looking at.
Mm. Well, that's good. That was a good question, K Small. That was a good question. All
Okay.
right. Number 3.
Failure to reconcile the stimulus. Oh, these people play too much. The IRS knows that y'all got the stimulus money, folks. So don't say, oh, I didn't get it and try to get it again. Because the software is going to tell you that, oh, you're getting it again. But the IRS is going to say, you tried it. We're taking the money. So when you think that you're getting $7,000 in refund, but you got a $2,800 stimulus that you said that you didn't receive and the IRS knows that you received it, they're going to deduct 2,800 from that $7,000 refund. And now you're upset because you planned for $7,000 and $7,000 is not coming back. The IRS knows how much money they gave you. And a lot of things that people have been doing is they have been ignoring the letter. So the IRS has given you the letter saying how much stimulus you have received, right? If you filed married filing jointly, they split that letter in two this year. So if you have, the reason why they did that is because say you got divorced during the year, You have your letter, your husband have your letter, so you can file your taxes separately if need be, right? So if you have, Taisha, I'm going to use you as an example. So three
Okay.
kids, right? So 1,400 times three, that should have been your stimulus, right?
Mhm.
So if you, what's that, 4,200? I can't do math right now. 4,200. So you should have got a form for 2,100, and Elias should have had a form for 2,100, right?
Mhm.
So when you file your taxes together, you need to put, some people have been putting just the 2,100. No, you need to put the amount that you and your husband got together, right?
Mhm.
So
Mhm.
put the 4,200 so the IRS doesn't think that they need to send you another amount, right?
This is why it's important to have somebody that's knowledgeable because you could really mess yourself up if you don't, because sometimes people don't want to pay the money
Mhm.
for a person like you to do the things that you do, but it could help with so many different things, like the mistakes that we make. Because some of this jargon, we don't understand.
Right.
We just know that we want a refund, which we just learned today that the only reason that you're getting a refund is because you're paying back so much. You're paying the IRS so much money that you're
Mhm.
getting a refund back because you paid too much out for the whole year. So
Right.
they're, just taking what they're going to take, and we don't even know how much is supposed to be taken out of our, our accounts and things like that. And then we just learned also that if we're selling dope, we got to make sure we pay taxes on that. And then all these other things, like it's crazy because we don't, the lay people don't understand this jargon as much unless we're reading and then asking still
Right.
someone like yourself, what does this mean? What does it mean? So it's worth it to pay the extra money for somebody like you to, to help out and to make sure that we're not making these types of mistakes. Would you agree?
Agree.
All right.
So then the next thing is the child tax credit letter. Okay. So I'm going to try to explain this because there's a lot of confusion on this advanced child tax credit. So this year, the child tax credit that you're supposed to take on your 2021 return, the IRS allowed you to get half up front. It wasn't an advance. So if you got $250 per child or $300 per child, it was an advance. You got half of your child tax credit up front. What I see people saying is, why didn't I get the whole tax credit on my tax return? You got half of it up front. The IRS is not giving you any more money than you deserve to have. So if you see it's not
I
happening.
want all my money,
So
Marie. I want all my money.
listen,
All of it.
I've
Yeah.
been getting that a lot. They're like, I'm supposed to get 3,000 per child or 3,600 per child. Why do I only see 1,800 on the return? Because you got the other half already. Okay.
Now,
So
was there a way that we could have avoided that by saying, "Hey, I don't want this money up front"? Because I didn't see that letter where you could have denied the money and said, "No, I want it for the remaining of this year."
you could have opted out. You could have opted out. And they did send some notices. I noticed that a lot of people did not get the notice, but
No, we didn't get the notice.
right. But you could have opted out. A lot of people didn't. So you are not the only one, but some people got the letter that's saying that these payments are going to start on July 15th. If you
That letter?
No, just said we didn't get that letter.
We didn't.
No,
You see, they just gave it to us, and we didn't even. I knew I was just getting some extra money. I was like, "Oh, you worked extra." He was like, "No,
no,
that's from the
no,
government."
no. That was a part tart.
no, there was
A pop
mhm.
tart.
Yes, pop right in my bank account.
Marie, I got a question for you.
No problem.
I got a question for you. Here you go.
Over here, girl.
I am a mobile hair braider. Can I purchase a new vehicle and claim the expense on my taxes and the gas expense?
Okay. So yes and yes. So depreciation, you can purchase a new vehicle. Normally, you wouldn't be able to take the cost of the whole vehicle in the first year. You normally have thresholds like You can take 10,280 this year. You can take a certain amount the next year because depreciation goes in cycles. Like there's years that it has to be depreciated against, etc. Right? But this year, lucky you, in 2021, if you bought the car already, you can deduct the whole price of the car in the first year. Okay,
Oh, Levon,
so
did
you can.
did you buy it before? What was the year?
It was 2021. If she bought it in 2021, she can deduct all of it.
We should have
When
hold
did
on.
you buy the vehicle, Levon, or are you trying to buy it now? Let us know in the comments. You can even call
She
in if you want.
she can still. There's certain qualifications, but she may be able to still get the whole deduction if she has Section 179. She can choose Section 179, which is a whole other topic. But yes, there are ways that you can deduct the whole cost of the vehicle
Right.
and gas. So when you're deducting business, wait a minute, back up. It's all depends on how much use you have on it. No, I didn't.
She didn't purchase it
You
yet.
should be fine. Lavon, you can talk to me after. You should be fine anyway. Okay.
She says she will now, though.
Okay. So here's the thing. You either take the standard mileage rate or you take the actual, right? So if this vehicle is going to be for 100% business use, then you don't have an allocation issue. But if it's not for 100% business use, you have to allocate the percentage that you're going to be using it for the business. Okay. So you can't deduct the whole cost if it's mixed use property, but you can deduct the majority. Because one of the questions that they're going to ask is, was another vehicle available? Can you, was this 100% used for this business?
Mhm.
So there's a little bit more there.
They sound like the insurance company. They always say, "Were you able to move out of the way when the car hit you? Were there other options that you could have taken?" And it's like, no, this is what I want. Why can't I get what I want? They
Yeah.
hit me. I want you to pay me.
Yeah.
So yeah, there are some, but normally, yes, you can deduct the cost of the vehicle, but usually it's through depreciation. You're welcome, Levon. Okay.
All right, let's go on to the next slide. I hope you guys are liking this. You're giving some really good golden nuggets here, Marie. So I really appreciate you again for coming on, helping our people out so that they can know how to stay abreast of their taxes and not sell drugs. Thank you.
All righty. So not keeping a copy of your prior tax return, your tax preparer should be asking for this. If your tax preparer is not asking for this, you got a problem because they need to know. I ask every single client for your prior tax return. I need to know if somebody messed you up in the past. I need to know if you had credits that carried over from last year, especially this year. I haven't mentioned on another slide, but I'm going to mention it now. We have a something called a look back credit. So if you didn't make enough money in 2021 because you probably had unemployment or just life happens, right? So if you didn't earn enough income, you can look back on your 2019 or 2020 income and use your earned income from those years
Mm.
in order to get the earned income credit. So
Sure.
if you don't qualify for it in 2021 because you did not have earned income or your earned income was too little because it was basically you got laid off from COVID, you um, collected unemployment, so your income is not up to par like how it used to be, you can look back on your 2019 and 2020 numbers. So when your tax person asks for the prior year return, don't get jumpy and be like, well, why are you asking for that information? It's necessary, okay? Because sometimes there's transposition errors. You can tell me that your social security is 1234 when it's really 2234. You
Mm.
get what I'm saying? And by looking at the prior return, I get information that you may have forgotten to tell me, or I get credits that you may have forgotten to claim. because you forgot to tell me that information. Okay?
Oh
A
wow.
question for you. What if you collect unemployment? You have to file a tax on that also.
Yes, unemployment is taxable.
Now, what if somebody claim is for a fraud is being happened to your taxes, I mean to your unemployment, where somebody collecting your unemployment behind your back? How do you go about getting around that?
Ooh, that's a good
You
question.
have to, well, you have to contact the state, let them know that somebody has opened up an unemployment claim, and you have to also get an identity pin because now there's fraud on your account. So you need to request a pin from the IRS so nobody can electronically file your taxes but you.
Okay.
Oh, this is good. Yeah, he has to have a pin, and there was some identity theft done on me with
Mm.
unemployment and all that other stuff. Like it was really really crazy.
Yeah.
Somebody got over $20,000. I said that was available
Yeah.
for me
Under
to
her
get.
name. Under her name.
I wasn't even trying to look for it, and they got a lot of money
Then when
in my
she
name.
went and filed a block on it, they turned around and said, "No, that's not her. I'm her.
Yeah,
Wow.
the people said no, that's not her. I'm her. I'm like, wait a
I got ID."
minute. Yeah, it was
That is
crazy.
hilarious. That's bad, but that happened to someone that's close to me too.
Hmm.
But she's young. She's 23, and I'm like, unemployment. You ain't work long enough to connect unemployment.
Yeah,
So yeah.
it's crazy. All
Hmm.
right, let's go on to your next slide. Those of you who are liking this, please comment, like, and share. We do appreciate your comments thus far, and you can continue to comment and ask some questions if you have some. No question is too small. No question is too simple. Just yeah, Levon, 20K. Please believe it. I'm not even. I wish I could put it up right now, but they took that money. They did real good
Yeah.
with it. I'm sure. But nevertheless, y'all ask your questions. She's doing well with answering these questions. I think so far, and you guys are coming with the heat. So thank you.
Okay, so inaccurate account numbers. Make sure your bank account numbers are correct. Sometimes, if you give a wrong account number, this is why I ask people to screenshot it directly from the bank or give me a voided check. Because when you're, again, transposition errors, you can write the wrong number on your return, and the IRS takes forever to give you back your money. They will send you a paper check. That's snail mail. You don't want those problems. It may go to an old address. Don't do it to yourself. Make sure that you're looking at your return when we give you the preview of the return. Don't let anybody file your taxes without giving you a preview. That's first of all. So some people, they just say, oh, you can file it. They look at the refund and they're okay. Like, I'm going to sign my life away. Just file it. Review your return. Okay.
Hmm.
So failure to pay estimated taxes. We talked about that earlier. You're fine if you did not owe greater than 1,000 last year. So they won't really penalize you, but you have to pay your estimated taxes. There are credits that you could be missing out on. 7202, for those of you who are self-employed and you had to stop working because you caught COVID, just know that the 7202 exists. So there's a certain amount of days that you can, it's basically sick pay for self-employed. So you can,
What? How
yes.
would we have ever known? Oh, our tax preparer should have told us this.
Yep. So there is a
Oh,
70,
this is good.
7202. It stopped in September 2021. So if you were sick anytime before September 2021, since COVID happened, you need to know about the 7202. All right. So number 8, I jumped ahead of myself. I just talked to you about that. Make sure you read your return before you affix your signature because they're trying to get you the maximum deduction, but you don't want those problems because at the end of the day, we may get fined as tax preparers, but you going to jail, not us. Like, okay. So unless it's like really, really crazy, um, 9 times out of 10, you're you get the brunt of it because it's your return.
Hmm.
Okay. So you have to be careful.
Okay.
Filing head of household erroneously. Um, oh, my people, let's talk about this.
Please, let's talk about it. Hold on. Let me get you on the big screen. Let's put you. Yes, talk about
Okay,
it.
so head of household, right? If you are married filing jointly, like you see how Ty and Elias are here together, y'all married,
You know,
We
we've married
together.
for real.
married for real. Head of household is not for you. So what people are doing is they're like, okay, I'm married, but instead of filing jointly or married filing separately, my husband is filing head of household but he's putting a different address on his tax return, and I'm filing head of household and I'm putting a different address. Don't do that. Don't play with the IRS like that. Head of
Wait,
household,
wait. You could do. People could do that. You could do that.
not legally,
We
but
not.
Oh, we're
that's
not
what.
doing that.
We're
I
not
never
doing
know
that.
Don't
that you
try
could
it because
do
I
that.
told
I
y'all.
try to be so. I try to be so squeaky clean. I'm scared to do stuff like that.
I
Got
But
some
people are
bold
doing
people
it.
out here.
I don't want IRS in our business like that.
Exactly. So a lot of people are doing it. So just be careful. Head of household is for single people, or if you're married and your husband or your wife been out of the home for y'all separated and they did not live in the house for the last 6 months of the year, then you can file head of household. But you cannot file head of household for if you're married filing jointly. It's a benefit. The reason for head of household is I don't want these single people to not get some type of benefit, like to be punished just because they're single, right? They're taking care of a child, so I want them to be able to claim head of household. But yeah, no.
All right, Marie.
Don't
We.
play them games.
I don't. I don't ever play with it. Have any of you guys ever known someone to get in trouble for filing that way? Let me know in the comments. I we don't play with the IRS like that. I
No.
don't like people in my business. So I
Okay.
was always told before someone said, "Well, you should file head of the household." I'm like, "Why? Why would I do that? You know, or to file separate from him so that I can get more money from the children." I'm like, I don't need it that much. I don't need it that much. I don't want the IRS later on down the line. Sure, I know a lot of people that are getting away with some of these things. The other stuff that you were talking about, the other addresses, I didn't know that. You know,
Yeah.
sometimes I'm naive to certain things,
And I
but
try to get them on the phone. It's a nightmare.
yeah, IRS on the phone is a
To ask any
nightmare.
question, they're gonna throw you around all around the corner.
So I don't ever want to do that. Go ahead.
We as practitioners, um, I probably shouldn't be saying this, but we as
Maybe
practitioners,
don't say it. Don't get yourself in trouble because
no, it's not
you
going to
gonna
get
go to
me in
jail.
trouble. But I
This
just
is
don't want
hosting the
y'all
show,
calling me
IRS.
because no, 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 this is not going to get you in trouble. But your tax preparer, I'm going to say this: if you have an issue with your tax return and your tax preparer is privy to it, a lot of times we don't have time to call the IRS, but we can get through to the IRS faster than you. I'm not going to tell you our ways, but if we call on behalf of our client, we can get through to the IRS faster than you would be able to.
Well, tell
So
me the secret later. So
I'll tell you the secret off here
tell
because
me out here.
I don't want anybody in my profession trying to kill me for telling y'all the top secret.
Tell
But
me, tell me
but we
later.
can if there is this one I can give you guys, but I can't give you the other one. But this one I can give you if you can't get to the IRS for some reason, like if you're calling and it's like taking like 3 hours, or because the IRS does a courtesy disconnect. If you are on hold for a long time, they'll just be like, "Oh, we can't take your call," and hang up on you. It has happened.
Yes.
Yes, I know.
Yes.
So you can try calling the tax advocate in your area. Google advocate, like wherever you live, and call that number. And that's a better way of getting in contact with the IRS. Okay.
Let me put that in the comment section. So call the tax advocate to get in contact with the IRS.
Yes. Tell them what your issue is, and you will be connected with the IRS faster.
Hmm. All
So,
right.
tax
That's
advocate
good.
is a way of vetting pretty much what calls are coming in. So now that you've actually spoke to a tax advocate, they're more inclined to answer your call because you got through the preliminary searching for what you need done and they identified the problem. Now they'll connect you to the IRS. Okay.
Wow, 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 wow. Well, thank you for that information. I hope that blesses somebody out there. So call the tax advocate. I think I'm going to be using that. We've never heard of that. I
No.
hate waiting in line, and they do hang up in your face.
Mm-hmm.
So I don't like that too much. Now the time is getting near. It's 8:55 right now, and I like to be on time and also end at a reasonable time because people have things to do,
All
and I
right.
want them to come back, of course.
Okay.
So
We can
I don't
probably go.
want to say I want to fly through your slides, but let's go ahead and just give some brief information on the next couple slides. Is that all right?
That's perfect. Okay, so the last one on this one is not adequately tracking your income and expenses.
I
You
apologize.
no, you're fine.
Oh,
We already spoke about it. So
okay.
carry on. Charitable contributions. These are the updates. So charitable contributions above the line 300, jointly is 600. So what this means is you usually had to itemize in order to claim charitable deductions, but now you get a credit for $300 of the charitable deduction you paid, whether you itemize or not. Okay. So jointly, if you're married, it's $600. Standard mileage is 56 cents per mile. Um, like what was her name? Levon was asking. Is that Levon?
Mm-hmm.
Okay,
Levon.
she was asking about can she claim actual? There is you can claim actual or standard, either or. So standard mileage is 56 cents. It already includes the depreciation, etc. in there. And then actual expenses is when you add up like your tires, your gas, your so there is an option. So you just have to know which one gives you the better benefit, okay? So child tax credit, we discussed this. It increased from 2,000 to 3,600 um, in 2021 if your child is under 6, and then it's 3,000 if your child is ages 6 to 17. Fully refundable. That means even if you did not earn a dollar, you're getting, or you did not pay taxes in, is fully refundable. Okay.
All right.
But your AGI, there's thresholds to this. Your adjusted gross income cannot be more than 75,000 if single or 150,000 if married. We talked about advanced credit, earned income credit maximums. This is pretty self-explanatory. If you have no qualifying children, the maximum earned income credit you can get is 1502, and then these are the thresholds. So take a quick glance.
Mhm.
How much money you could potentially get if you have kids on your return. This is the potential earned income credit.
Now,
Next.
does anybody have any questions on because I do see a lot of comments saying that that now some people say they didn't get their COVID checks back in 2020 and they were calling and the lines were dropping. Is there any way that we could go back and get that money?
They would have to amend their 2020 return to get it. So you
But
got
it
to,
is possible that we could get it.
yep, that's the only way you can get it. Claim the recovery rebate credit for 2020 and get it. So they're talking about the 1,200 and 600.
Absolutely. Now, you asked, are we asking about one thing or another thing?
Which one?
What did you just say?
No, no, no. So the stimulus for 1,400, right,
Yeah.
Right.
is for 2021. That
Uh-huh.
person said they didn't get it for 2020, right?
Right.
So the ones for 2020, you got one for $1,200 in 2020, and then there was another one that came out for $600. Correct.
Correct.
Yeah.
Correct.
So if those are the ones that you're talking about, you need to amend your 2020 return in order to get that money. You need to go on your 2020 return and say, I did not get this stimulus. So amending the return will trigger your refund.
A
For
lot of people are saying
Yeah.
that they didn't get it.
I tried that for the 2020. Remember when they had did my the first one we received,
Yeah.
and it got reversed back to them, but it got lost in the
In the
transition
shuffle.
and the
That's what
shuffle,
that was?
and I never
Well, you can
received
call
nothing.
them. They'll reissue it to
Oh,
you.
I called them 1,001 time, and they know they told me to call this entity. I called this entity. The entity told me to call them back. Basically, playing tennis with me.
Okay, we'll
Those
work on
courtesy hangups that you were talking
it.
about. So
Yeah.
yeah, you're gonna have to stay on the line. But there are a lot of people that are saying the same thing that they didn't get their 2020 stimulus. But this is good to know that they can or that shoot we can go
Hmm.
back and get that. It is 9 o'clock now, but I'm gonna stay on for just a few more moments because we're not fully done with this. This is a lot of information and there are a lot of comments
And it's
that
very
are
important.
coming in, and this is very, very informative. also.
I see Case Small got a very important question.
Yes, there is a very important question here uh, from K Small. But now, Miss, it looks like Sharella Nelson, you can get her information. We'll put it up later in the once we're done. It was posted in the beginning, so you guys can always go back and replay this video. But if you need her information, I can put it in the chat. But she's going to give you her information before she gets off the line, and I'm going to post it as well. And you guys can snap a picture with your phone, or if you're on your phone, or however you need to get her information so that she can help you guys out with your future taxes and possibly it looks like getting some of your money back since
Mhm.
she has the direct connection to getting into the IRS because we don't have that. With that being said, there is a question. I think this is a good question.
Mhm.
Is here? Can you claim your foster kids on your taxes?
Yes.
Okay, straight to the point.
Anything but yeah, court order. You can.
Yes. Someone made a comment here. It's just a comment. If you don't file your taxes for 2020 year, oh, this is a question. If you did not file your taxes for the 2020 year, how much is the penalty, if any? I think you went over that, didn't you?
I did, but not in detail. If you okay, here's how the IRS works. If you were going to get a refund, they don't care. If you were going to owe, then you'll be penalized. So the penalty rate usually is around 250-ish. There's a failure to pay and there's a failure to file penalty. So it all depends on your situation. And then they charge you interest
Oh,
Oh,
because I
wow.
know some people at my job, they wait every 3 years they file their taxes.
because they can, like, you have 3 years to claim a refund.
Mm.
Tax break for taking care for your, that would be the, you can claim your elderly parents as a dependent and you can get the dependent care credit. So the child and dependent care credit that everyone has been talking about, where it's 8,000 or per person, or 16,000 if it's two dependents, you get 50% credit. So it's like if you paid 16,000 in dependent care, right? The IRS will let you get a credit of $8,000. So that reduces your tax line by line. That reduces your tax by $8,000. Okay, so
So, what the question was for those of you who are just coming in, the question was is can you file or have a tax break for caring for your elderly parents? So for those of you who are just trying to, get in. With that being said, let's go on to the next slide. But Shantice, she says, thank you so much for this information. I think it's very, very
you're welcome.
informative. Very informative. All right, let's go on to the next slide.
Okay, this one you can actually skip over this. These are just thresholds. So maximum AGI for EIC. Tax updates. We talked about a look back credit. We talked about the recovery rebate, the child independent care credit. That's what we were just talking about with the do you get credit for your taking care of your elderly parent. This can be a child or a dependent, right? That you
Hmm.
have to take care of. Required minimum distributions. This is for retirement plans. Once you reach a certain age on certain retirement plans, you have to take that, you have to take your money out. If you don't, you're getting a 50% penalty. So it makes no sense to be charged 50% penalty because I didn't take my money out.
Hold on.
That's just,
Say that again.
Say that one more time for the people in the back that need to hear it.
so if you have, if you reach a certain age, right? So retirement, more than likely, you can take out your retirement when you're 59 and a half, right?
Yes.
When it's usually when you're 70 and a half, that's the age for most retirement where you have to start taking your money out because some people just leave it there but so it can grow the interest. If you don't start taking out at 70 and a half, you will be charged 50. You have a RMD, required minimum distribution, right? So, say they're saying the IRS says you have to take $40,000 out of your retirement every year after a certain point. If you do not move that money, if you don't take that money out, you're going to get a 50% penalty. So, you're going to have to pay tax. So, if you're supposed to take 40,000 and you
Man,
didn't,
they can't even let you retire
your
happy.
penalty is $20,000.
Yeah.
So it makes sense that you just take your money out. They're penalizing you for not taking out your money.
So
That
when you take it out, where are we putting it? Because even when you put it in the bank, it's not growing any interest or anything. So is it best for them
And
to invest it?
that's the thing. They want to keep us in a position where we depend
right.
on them.
Mm.
The best thing is to invest it, but at a certain age, you want to do low risk investments. You don't want to do when you're young. You can play with the high risk, but when you're older, you don't know how much time you have left on Earth, so you can't afford to be just
Oh,
losing your money.
this
Okay.
is some good information. This is good information. Thank you so much, Marie. Let's go to the next slide. Let's go to the next.
Cancellation of post-secondary debt. So if your student loans have been forgiven, it's no longer taxable. Usually cancellation of debt is taxable, but it's no longer taxable. 100% of deductibility for business meals. So in 2020, you could only claim 50% of your meals. 2021, if you went out to a restaurant, like we were talking about travel earlier, so business meals, 100% deductible. You don't have a 50% cap this year. Okay.
Okay.
That's good.
Next slide. Schedule C deductions. We talked a little bit about this.
We did. Our people are really on point. They ask you all these questions.
They
Software.
surely did. So there's no
Yeah.
no real need to go through these. The only one that I'm going to touch base on is home office deduction. For the simple fact, if you have an office in your home, right? This is mostly for a Schedule C filers. Then the portion of your home that you use for office space, you can deduct that. So, say Taisha and Elias, since you're in front of me, I'm going to use you as an example. So, this area that you're using, right,
Mhm.
to do the show, if that's 100% deducted for dedicated to the show,
Mhm.
you are going to get the square footage of that area, right? You're going to take that percentage because that percentage is used for your business, right? Then
Mm.
you're going to say, if I use 10% of my house for my business, then 10% of my rent is deductible, 10% of my light is deductible, 10% of my mortgage,
Ah.
well, your rent, mortgage, light, water, whatever you're paying for that area, that percentage is deductible. So you're going to take the square footage of the whole house, take square footage that you use solely for business, whatever percentage that is, you're going to apply it to the bills you're paying the house and deduct it. Okay.
If after we get off this line and people are not tearing up your phone, something's wrong. You are given a wealth of information. Somebody is saying, wait, where is my measuring tape? 'Cause we do a lot of things in our home, and you're telling us now that we can kind of deduct.
Mhm.
Uh, go ahead, baby.
I heard people was able to use their deduction for that, but I don't think they understand how to use it properly.
Right.
So we say things, but they don't say it in a proper manner to understand what's going on.
You got to
Yes.
come back, Marie. You got to come back so you
Okay.
can show us
Okay.
how to do this properly. You got
No
to show us how to
problem.
do this properly. Let's go to your next slides because it is 9:09.
And
So we're
we
gonna go
are
to the
working
next one.
Keep
hard.
going. These are some things that people forget. Um, so commissions and fees, affiliate payouts. I like to deal with affiliates. So whoever, if you refer somebody to me and you're my client, I give $25 out. So that's deductible to me, the $25 that I'm giving out for affiliate payouts, right?
Wow.
So contract labor, if we pretty much know what subcontractors are. Anybody that we use, like my advertising girl is a subcontractor, so I can deduct what I pay her. When you incorporate Sunbiz, that is deductible. So that annual fee that you pay every year to keep your
What?
registration.
Oh man, I gotta call my tax attorney on this one here.
We ain't got the right tax attorney.
We gotta call him back.
We gotta call them back. There's a lot of stuff that was not deducted. Oh my gosh. Keep going, Marie.
Fees, legal and professional fees. I paid my lawyer, I paid my accountant. So when y'all pay me, it's deductible. Rent or lease of vehicles, equipment, property, that's pretty self-explanatory. Repairs and maintenance, self-explanatory. Taxes and licenses. So when you paid your local business tax, when you pay all of those fees that you have to pay in order to keep your business afloat, these are deductible. Okay.
Mm.
So next slide.
I'm real mad. I want to stay on this slide. Okay. Next.
Okay, we're almost done. Tips to get you through tax season. Don't wait until last minute because we get busy as the time goes to filing. When it gets to April 18th, don't call me on April 16th because I'm going to say I'm busy.
Look, check this out. Somebody said, Shirley Nelson said she's a baker and her husband has a talk show as well. So
I'm
she needs
telling you,
all of her coins.
all of it.
All of
All
her
of 'em.
coins.
Don't
Yeah.
hold back.
Go ahead. We ain't gonna interrupt you no more. Yes, I am.
Do not do not rush to file taxes without receiving all your forms. I didn't mention something, and y'all are gonna kill me. But crypto, your capital gains on crypto is taxable.
Yes,
So keep track of your proceeds, your cost basis, your gains. A lot of people are doing crypto and not putting it in there. So you should have received a 1099-B. If you didn't receive a form, there are free aggregators online because sometimes they do so many transactions that they can't keep track of what their proceeds are. There are free aggregators and there are some ones that you have to pay for, like Coin Tracker, things like that. But I just wanted to throw that out there. Crypto is taxable. So
Yeah, my husband does all this crypto stuff. I don't
right.
know what it is, but I see the money going up.
The IRS is
Just
listening.
like
Hush.
that.
Okay.
Because oh God, the IRS, we don't do crypto. Oh my God, we don't do crypto. Jesus
All
Christ.
right. So yeah,
Talk
this
too
is
much,
called
Marie. Come get me.
you good. Okay, do not rush to file. Yeah, you got to get your forms. Okay. Don't. I had a client call me yesterday. Oh, I only have one W-2. I can't. I tried to call for the other one and I didn't get the other one. Can I file without it? No, ma'am, you cannot. I need you to have both of your W-2s before you come to me. Okay. Filing with last year's pay stubs, that does not work. We are governed by Circular 230 of the IRS. The Mickey Mouse accountants that y'all going to that says give me your last pay stubs, don't go to them. Wait till you get your W-2. This should not be happening. You should not be filing with last year's pay stubs because the pay stubs are missing information that the W-2 will have. Okay.
Yeah.
So do not, absolutely do not file with your last pay stubs. Okay.
Yeah, I noticed
Yeah.
that when you get the W-2 form, it have a different number on it.
Right.
You
So
heard that.
find your prior year return now to present to your tax preparer. Create an account on irs.gov to view your online transcripts. Sometimes if you don't know if you got your stimulus, you don't know how much advanced child tax payment you got, you don't know what the IRS has for you, you need to go look for your transcript. Like I said, claim your own kids. Oh, and don't forget about injured and innocent spouse. And I think this is the last topic. Well, I have one more slide after this, but injured spouse is when, say, I hate to touch on this sore spot, but we're talking about let's talk marriage. So suppose
Mm-hmm.
husband got a baby mama out there, right?
Mm-hmm.
So, but husband got a baby mama out there. I mean, she's only a business. But here's the thing: if he's liable for child support and y'all file jointly, right? So you can file injured spouse. So if like there's back child support and the IRS is about to garnish the wages or they have been garnishing, you can file jointly and file injured spouse. That's basically appealing to the IRS. Don't take my portion of the refund because that's not my obligation. That's his obligation. Take his portion. Don't touch mine. Okay.
But
So
see,
that's
if you love your spouse enough, see what I did was I let them go ahead and get all the money so he can come off child support quicker.
And I am off
He
child
is listen.
support.
So that's a whole nother topic. But if you're a good
that's
wife, this is just how I feel. Don't take my word for it. Yes, it is his responsibility, but when you get married, it's for better or for worse. So I
Come
said,
on
go
now.
ahead and let her get that money. Let her get it. Because if I was I'm thinking
Right.
if I didn't have my father and he's doing all these other things, or I can't go see him because the mother is being crazy, or
Every situation is
every
different. We
situation
gonna
is.
talk about our
We
situation,
learned that last week.
and we let them talk about their situation.
But I,
Absolutely.
but I like that, Taisha, because you want to get people out of your pocket quickly.
Yes.
Yes,
And
Because
we got
some
them out of
people,
our pockets quick.
and they don't like it.
but hey, it is what it is. Y'all free. But anyway,
Tell 'em- Look, we got a lot of comments on the side. Hold on, because I want you to to
okay.
say what you were going to say again. But someone asked, what if they lost their W-2? And then, but I want you to respond to what you were getting ready to tell us
Oh
about
yeah.
the
So
injured spouse. I'm sorry.
the injured spouse, that would what it if he has like a past debt, it's not just for child support, but that's the most common, right? So you want to file injured spouse if you want some of your refund, right?
Mhm.
So now innocent spouse, that man did something fraudulent. Why am I'm sorry, Elias. I don't mean to put it on the man.
Oh no, you didn't hurt my
Or
feelings. That's
what
not
We
me.
sure
That's
lane
not me.
because
That's
we
not
did
me.
good over
something
here.
That's
fraudulent
me.
and you're telling the IRS, get me out of that. That's none of my business. Like that's when you'll file innocent spouse. Let me answer Shorelia? Let me
Yes,
answer your
really.
question. What if I lost my W-2? If you lost your W-2, you need to request it again. Call your HR office, request it. Um, there are ways. If the IRS, I'm not sure if they're available yet, but what can you?
Finish your comment to Miss Shorelia, and then we'll go to the next one. Go ahead.
What did she ask again?
She asked, what if she lost her
Yeah,
W-2?
W-2. Okay, request it, and then I don't know if the IRS is ready, but the wage and tax transcript can tell you what your W-2 was, because you can get a wage and tax transcript from the IRS, but I'm not sure if they're available yet for the 2021 um, tax year. So what the IRS, when your employer gives you your W-2, right? They have to submit it to the IRS before they give it to you. So it electronically goes to the IRS. So the IRS knows what your wages are. That's why you get all these letters saying that you forgot to report income or you because that it's due at a certain time. Okay.
Mhm.
So that's what you can do. You can request it. I had a client told me the other day that she couldn't get her W-2. I was like, ma'am, you work for Walmart. There ain't no way you could tell me that a big organization like Walmart and you cannot get your W-2 if you don't call that corporate office and get your W-2 because your employer could have very well, your immediate supervisor could have very well not given it to you, but there are ways of getting it. Okay.
Absolutely. Now, Levon Dillon asks, what can you claim for an Airbnb rental property in the Dominican Republic?
So that's foreign. The only thing you can pretty much claim is you have to report your worldwide income, right? But you can more than likely you have to pay taxes in the Dominican Republic and get a credit for the taxes that you pay. So you can file in something called 1116. So if you file taxes on your income there, then you can get the credit for what you filed over there. This applies to student loans as well.
So Tanaya asks, this applies for student loans as well. I don't
The
know if this is
innocent
a
spouse,
question
yes.
or a comment. Is
Is
it
she talking about an innocent spouse?
so? Tanaya, go ahead and repost the question. I don't know if it's a question or a statement. So, um, just clarify a little bit there. Um, Levan says thank you.
You're welcome.
And then Sharella, oh, so she said yes.
Yeah, the
Uh,
injured spouse goes with the student loans, not innocent spouse. I kind of use them interchangeably, but the innocent spouse is for like past debt, like fraudulent debt. The injured spouse is what you would use for student loan, child support, all of those things.
so now I don't think she even knew that because she's saying that it was a statement she was making, but I think you're answering that question as well, just in case people had it too. So that's really good because I didn't know that.
No, I didn't know either.
Yeah, this is good. we're going to complete your slides and
Yep, one more and then we're done. Tax strategies. I know this is about to blow up on this one, but you guys can call me later. Hire your children and pay them up to the standard deduction.
you
So
told me that one. Thank you.
you're welcome. Take advantage of the depreciation expense. We talked about that for rental property. You can depreciate rental property. You can depreciate a vehicle. Max out your contributions to your 401k. If your employer is matching, you have no reason not to have a 401k because that's free money. Get that 401k money. If they're matching and it's saving toward your retirement, go get it. Okay. And it reduces your taxable income. And
Mm.
that concludes my presentation. Thank you all for your time.
Mm.
Now, you guys asked, I'm going to leave this up here for a moment on how to reach her. I'm going to put this here, but she's also going to vocalize it for the people who are listening and are not able to actually see you at this moment. So tell the people how to reach you, Miss Marie.
Okay, so the name of the business is Linus Accounting and Tax Services Inc. So you can reach me on my website at www.lionessaccounting.co. It's .co, not .com, okay? So you may also call me at 786-460-0505. And I'm also on four of the main social media handles at Linus Accounting on Facebook, Instagram, Twitter, and LinkedIn. Okay.
All right. Well, I want to thank everybody for coming in and tuning in with us today. It has been an amazing evening with Miss Marie. We actually went over the time. It is 9:22. People came with their questions today, and
Very
so
informative.
it was so informative. There were things that I didn't know. Some of the things she did tell me, but there were things that I didn't know, and I didn't know a lot of the things that you were doing either with our taxes. Like I don't know. I just know that the money comes in the house and I spend it. So as long as it keeps coming in, but I guess I should be abreast of these things, Marie. I still need to know.
To help when both parties know what's going
It
on.
does help when both parties know what's going on. Now, I do have one more question for you. Now, we've been with the same tax preparer for many, many years, and
Mhm.
it's hard to kind of transition over when you're used to certain things. But a lot of this stuff I never heard of. I
Right.
never heard of, and so we have some questions that we need to ask. But for those who are trying to transition over to a new tax preparer, what are some of the things that they should be looking for?
You should be looking for, sometimes you have to look at the experience of the person, the credentials of the individual. A lot of times it's not that the tax preparer is not knowledgeable, it's just that they don't know that your situation changed. So you have to be fair with your tax preparer, because what I see a lot is that people introduce a lot of new things and they don't think that it's relevant. So they don't tell the tax preparer, because the tax preparer, like, I'm not going to go A through Z with each tax preparer, right? I go based on the information you tell me with each client. So you have to let me know this has changed, right? So a lot of times you have to be just very honest with your tax preparer about what's going on. Like if you don't tell them that you owe child support, they don't know to tell you, okay, well, let's do innocent spouse or injured spouse, right?
Right.
So you have to be very open, tell them your whole financial situation
Mm-hmm.
in order for them to be able to guide you on taxes. So
Exactly.
just be vigilant in that, because a lot of tax preparers got a bad name because they say, well, my tax person didn't tell me this. Your tax
Hmm.
person, we're not going to spit out the whole IRS code for you,
Very good.
because it's a lot of information to just throw at you. But if you tell me like, hey, I had COVID last year and I lost my income, then I'll tell you, oh, did you file the 7202? Do you need that attached to your return? Or a lot, say things that are relevant. It may not be relevant to you, but if it affected your financial situation, it's relevant. So make sure you let your accountant slash tax preparer know what's going on.
Thank you so much, Marie. I really appreciate you for coming on and joining in and coming onto the show. We would love to have you back. Would you come back?
Of course I will.
Somebody wanted to leave one last comment. Can we ask them for a loan? Just joking. Shantice, no, you can't ask them for a loan. They're not going to give it to you. Babe, is there anything that you wanted to share before we sign off?
What I would say is,
Why your voice so deep like
I'm
that?
sorry, I can't help it.
Gee
I'm a man.
whiz. Go ahead.
It's an old saying in the Bible says we know we have not because we ask not. I
Right.
would say you don't know because you don't ask.
Right.
We basically here to help everybody with this because hey, taxes is important. Your money is important. It's very important. So
Absolutely.
we need to get on the ball and think about our finance.
Absolutely. Oh, wow. All right. Well, Marie, any last words?
You've been a great audience and you guys have been great hosts. And thank you again for the invite. And just have a wonderfully blessed week. Y'all take care.
Oh, bye, guys. Thank you so much for coming on. Marie, hang on the line because I have to ask you some background questions. I'm
Thank
telling you,
you.
we need to know how to get in the back door. So you hang on there.
I'll be
And
here.
thank you guys for coming in again. We're out of here. Thank you
Good
for coming
night
to
and
Let's Talk
let's talk
Marriage.
marriage.
That's right. Bye, guys.